The focus of this video is mainly going to be directed towards the moving averages and how to really utilize the moving averages in two different ways. Here we have the Euro USD, and this is currently the weekly chart. One way in which we can break down and utilize the moving averages to work within our favor is by, number one, using them on a weekly time frame in alignment with the daily time frame. So, Euro USD recently, we are still consolidating in this range between 1.1450 and 1.0500. Moving averages recently have crossed back to the upside on the weekly. If I just flick over to the monthly as well, it looks like we may be getting the first crossover in nearly 3 years on the Euro USD monthly time frame here as well. We have the 18 EMA here, and then we also have the 8 EMA over here, the blue one. We don't always need the monthly, weekly, and the daily to all align in the same direction. If we tried our best to wait onto those three confluences to be fulfilled, then we're going to miss out on a hell of a lot of trade opportunities. Why? Because the monthly can lag a little bit. So we more or less want to focus our attention towards the weekly and the daily. If the monthlies crossed in our favor as well, in the same direction as the weekly and the daily, then by all means, that there is a strong trending market. So number one, Euro USD, we're getting the crossover. Perhaps let's move the candles out the way. Certainly looks like it to me that we're going to see a reversal on the Euro USD on the monthly time frame. Weekly. Okay, the weekly, we had a break above the weekly resistance, and again, the moving averages crossed over here. Daily, we're also crossed over too. Now, what I like to do with the moving averages is, yes, if the weekly and the daily are in the same direction, that's great by all means, but you don't have to wait for every single trade setup to fulfill that in order to actually execute. So, for instance, MA play, MA bounce, how to actually trade from the moving averages. So number one is to establish the overall bias. That's why I mentioned those few points just then. If we do have a weekly crossover, let's say to the upside, dailies cross to the upside, we only really want to be trading to the upside, i.e. buy positions. What we find that will happen, and we can see this here right now on the Euro, if I just remove these areas, these zones. I have my key levels on. Everybody should have key levels mastered, more or less by now. Okay, this resistance zone across here, 1.1260. We have came into it and we've stalled. We see a shooting star formation here. We have a tweezer top formation here. We have a mini 3 pin here, 1, 2, and 3 as well, ready to potentially roll over Euro USDs. However, the 8 EMA acts as a brilliant boundary for a dynamic area of support in this case. So this supportive region right here, as you can see, if I zoom right in, we can see here the wick has pinned the 8 EMA. Now this is acting as support, and we can also potentially, if I grab my, 1 second, if I just highlight this zone right here, okay, we can see resistance, support, support, support. So this is a supportive zone, a supportive region right now. This area is great to potentially look for bounces. Reason being, we have two confluence, where the moving average is a confluence, and we also have this mini area of support there too. What will often happen, let's say on a daily time frame, or this daily time frame, sorry, is if we can see a reversal from the 8 EMA. Sometimes the market will pierce the 8 EMA and rebound. So here we've tapped it. The body's closed back above this region, okay, 1.1160. Let's say that area right here is a key area of support. What we'd like to see, guys, is a reversal formation. So let's say this is a daily setup. The reversal will have to come on a daily time frame. Let's say we check out one of our candle formations, bullish engulfing, whatever it may be. This for me is a breakout and a retest of support. The EMA, as we consolidated over here, 1, 2, 3, 4, 5 days after the breakout, our 5th day, we've had a retest of this supportive area. So this supportive area for us now is a point in which we want to look for potential buy opportunities only if we see the reversal formation. So we could stalk the daily time frame, even something like a huge bullish engulfing candle. We could also see maybe a hammer candle, 3 pin back to the upside, 1, 2, 3. If I just take it down to the 4 hourly though for a second, see if I can find any examples on the 4 hour time frame. So the moving averages, as you can see, we crossed over here after support, boom, we broke out, we crossed over, price came up through our weekly resistance. Over here we had a pullback as well, so we tested this region as resistance, and this is the daily region here, support, support, support. So we've got 3 strikes at that support at the moment. But what's important is that the weekly and the daily moving averages are upright. So on the 4 hour, we want to just more or less either trade the crossover to the upside. Let's say we tested support, we have our confluences in play, weekly up, daily up. However, the 4 hours down for now. We've hit support here, we've crossed over, we broke back above the moving averages. So the 4 hour daily and the weekly are now in alignment. With the weekly and the daily in alignment, it's really then, it makes things a lot more simplistic if we just focused on 4 hour crossovers to follow the weekly and the daily, if that makes sense. So over here, the 4 hour, we're not crossed at the moment. We're crossed to the downside. The blue is below the red. But before I get to this potential setup, let me just go back over here. So what's happened here, we've pulled back. And you'll see this time and time again, guys. We might see a spike through the moving average, or we might, whether it be the 18, which is the red, or most often it will be a spike or reversal around the blue moving average, the 8. So here we've had the spike, we've utilized this area of support, this little zone, just around here. We've utilized that little zone, and as you can see, rounded bottom, and we've bounced straight back off. The moving averages remained crossed over to the upside. So the daily was up, the weekly was up, the 4 hour was still up, but we were experiencing a pullback on the 4 hour, and then we went into new highs. At the moment, we've hit resistance, so we need to be aware of the boundaries that the market is bouncing from. 1.1260. I think this is going to break probably next week. However, point here is that moving averages are up. We've tested a resistance, and then we've come into consolidation. Moving averages are back down at the moment. However, the daily and the 4 hour still, the daily and the weekly, still remain crossed over to the upside. Ideal situation would be we could wait here on the daily for some kind of bullish reversal formation or bullish pattern to form. I'm looking at 1.1450 on the euro soon. Or we could even wait on this 4 hour time frame, and we could wait for the 4 hour moving averages to cross over, then execute long. So there's 2 scenarios there. However, by the time, let's say the 4 hour was crossed back over and the price comes up, that will probably form, well, it will form the daily reversal. So the 4 hour and the daily are now back in alignment with each other. So moving averages, guys, we can use them with our support and resistance, trading the crossover on the 4 hour in alignment with the daily and the weekly. Or we can trade trend continuations, i.e. such as this, where we've found reversal pattern spiking through the moving averages. Let me just pull up another currency pair. So look at gold. Okay, so over here, weekly gold. Gold on the weekly is up. Okay, as you can see, we've crossed over for a while. We've seen last week was a hammer close, but the week before that we had a morning star straight on one of our support levels. The moving averages on the daily are up as well. As you can see there, we had the crossover here. We came into consolidation, but because we had the weekly and the daily up once more, similar scenarios as to what we had over here, we only really want to be going in the direction of trend. So we've just broken out of 1263/1264 resistance. And I'm actually looking for, in this entire price structure over here on gold, we have 1, 2, 3, higher low, higher low, higher low series. I'm actually expecting a new higher high to form past this area into 1300. So if we take into consideration what we've just spotted on the Euro USD, so similar scenario, we have the consolidation region. I've just marked it out differently, so this is the consolidation region across here. Gold, consolidation region across here. We've held on support, Euro USD, we're on support, and that was the crossover here. So we've crossed over, the blue has remained, crossed over to the upside, and then we've broken out of the region. I'm expecting gold to maybe pull back and then continue its uptrend. So I've looked at the weekly, I've looked at the daily, coming into the 4-hour consolidation, we've had the crossover to the upside, and that's that. So that's gold, that's euro. So we're looking at crossover on the euro, buys to the upside. Stops as well, when we're looking at stop losses in these situations, our stops need to go 15 to 30 pips below the box here. So if we are in a range or we're on support and we're trading the continuation, that's that. So stops 15 to 30 above the low. Let's say this is the low wick, this red candlestick, 15 to 30. So we have 1.1160. So we have 1.11. Let's say 35. I'll do 25 pips. Anywhere between 15 and 30 pips as a stop loss. Going long to your next area, to your next target zone, whichever that may be. Ideally, I've taken my targets from the higher time frames, i.e. the daily and the weekly. So that's the MAs for you guys there. Other situations may include things like this. Price action setups such as this. So we see the spike, spike, spike. We just keep retesting these regions. We've got a high test there, which is spiked straight through the 18 MA as well, which is pretty damn reasonable for a short trade, because we can clearly see that spikes 1, 2, 3, 4, 5 wicks, and then we've dumped there a little bit as well, then we've crossed over and so on. But I'm just trying to highlight this as a setup. It's more or less a doji spiking straight through. It tells us price has gone and pierced the 18 EMA, couldn't hold above it, and closed back below the 8 EMA there as well. So all of this, it just takes a little bit of practice overall to spot these kind of setups, but you can actually get some great risk reward setups based from the moving averages alone, the moving average bounces and so on. Let's go back to the daily time frame. So gold on the daily over here. As you can see, sometimes as well, we pull back to the moving average, spring off, pull back, spring off, pull back, spring off. So we're looking at wicks primarily. So the wicks are very, very important over here. So let me just highlight. 1, rejection straight through, and it's also at 1200 support. We've closed back above there on the daily, continue to the upside. Over here, 1, 2, 3, 4. I can include this wick as well, 5 wicks. Straight through 1225 here, and also piercing through the 80 MA, but closing back above majority of the time, apart from this one we closed slightly below. We spiked straight down to the daily area support there, and also the 18 EMA. Here also spike straight through the EMA. So again, guys, just use this as support and resistance. You will find your own way with it, as you can see here. So imagine a region in between as well as a key area, key zone. So it could come to the 8, the 18, or the region in between. Over here as well, rejection, not just from the moving averages, but also from the ATMA 1, 2, 3, 4, and so on. So here we have the breakout crossover and expecting gold higher price. So just a few things to look at with moving averages there. You've got the weekly and the daily. You've got the crossovers on the 4-hour time frame for executions. I wouldn't really mess around too much on the hourly if I were you. I'll stick to the 4. And you can also find daily and 4-hour bounces from the moving averages using pins, wicks, rejections in alignment with our key levels of support and resistance too. Thank you.